Good afternoon, traders. Today is Saturday, September 23rd. I haven't released a video in a couple weeks because I have been extremely busy. I have solved the market maker's algorithm. That's what I was busy doing. I have solved it, guys. I'm going to prove it to you. Every single day this week, I called it correctly, the pattern, the intraday pattern. I released the pattern on Twitter in the morning, and that's exactly how the pattern played out every single day. With the exception of the final leg of Wednesday FOMC afternoon. I missed that pattern, but I have since discovered why I missed it, and I won't be missing it next time. So today, I'm going to show you every single day, Monday through Friday, of the patterns that I called and the patterns that actually developed. And I assure you, nobody on YouTube or Twitter can do what I did this week. Nobody. Without further ado, let's get into it. And after we get into Monday through Friday, we're going to get into what's to come on Monday and for next week's pattern, which I do think we are going to bounce, and we'll get into that in a moment. So let's get right into it. What we have here is September 18th. It was about an hour after opening bell. I needed to see this. I said, okay, here's the pattern, guys. Twitter. Up, down, up, and then down. How did it go? Up, down, up, down. Yes, indeed. 42.71% gain from those calls. All right. And then 74.72% on those puts, the down move. Okay, so proof is in the pudding. Got her done. Let's look at Tuesday, September 19th. Okay, this one, I actually said I'm not going to trade at opening bell. I'm going to wait for the first 30 to 45 minutes to confirm a higher low. Actually, what I meant in this tweet was, I actually think it's going to go lower. But there was something in the pattern that I couldn't quite confirm. So I said, you know what? I'm just going to wait. I did think it was going to go lower because I tweeted right here, I'm going to wait for the first 30 to 45 minutes to confirm a higher low. So, we all know what happened. It went down. But what happened after that? Up. And that's what I predicted. Up. So, this was the pattern I couldn't quite confirm, but as you see in this tweet, I said, I'm going to wait for it to make a higher low. Okay, so overall, though, the pattern was correct. I did not trade. I did not trade that for this whole morning because I was watching it. I was like, I'm going to watch this. Okay, I was still kind of early in determining the pattern that was going to play out. So instead of just guessing, I said, I'm just not going to trade. Okay? So that was 32.61 on this up move. That was the gain that I made. Okay? In hindsight, next time I sense it would go lower, instead of waiting like I did, I'm just going to short it. Okay? So that's what I learned out on Tuesday. Okay, Wednesday, FOMC. Here's the pattern, guys. I released this at 9:08 a.m., about 38 minutes after opening bell. Down, up, down, up, down, up. How'd it work? Down, up, down, up. This was the leg that I did not catch at the time. I had it going up here. It actually went up and then down. Okay? But I got all of the legs right leading up to this final move right here. This final move. But I have since made the adjustments and what I should look for, and I see where I missed it. So next time, I will catch this. I will catch it. Okay? But nonetheless, so I shorted it right here. Right when it came up here. I shorted it right there. Exactly right there. Right as actually it was like 45 minutes before 1:45 p.m. Central Time. 15 minutes before 2 p.m. Okay? Boom. 56.33%. Boop. Of course. Okay? However, I did, let me go back. I did turn around and get calls to come up here, and it did do it, as you see. It did come up, but I held on to it too long, and then it ripped back down because I thought the pattern would stay up there. So I was up on those calls. I got this correct. This leg was correct. However, as we all know, it turned and went down. So I lost money on those calls. Okay, I lost money on those calls. Here's where it went up. I was making money on those calls here, but then it ripped. I was like, uh-oh. So at this point, that's when I got puts. Got puts covering, holding overnight. This is FOMC Wednesday. Holding overnight. Okay? Yeah, I got the Y leg correct. Didn't get the Z leg correct. Okay? This leg was the only leg I missed all week. Monday through Friday. I got every other leg correct Monday through Friday except this one. Okay? But here's the puts that I held overnight. As we all know, Wednesday night into Thursday morning, ooh, it kept on going. So 154% gain. At opening bell, I sold. Thursday, here's the pattern. I released it 10:13 a.m. So yeah, here was opening bell. I was watching this for a little bit. I needed to confirm. That's why I released it a little bit later after opening bell. But nonetheless, this is the pattern. Down, 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 up, fake pump, down, down. How'd we do? Aha! Down, up, fake pump, down. Yes, sirree. 44.88%. I got puts, right around here. Yeah. After I was watching this, I was like, oh yeah, this is going down. I got puts right here. Sold down here. 44.88%. Thank you, ma'am. I did a buy and ride. I said, you know what? This is Thursday was sluggish. I'm just gonna buy it and hold it. I didn't even like scalp this. I saw this. I don't care. I'm just gonna hold my puts. Boom. That's it. Okay. I didn't even, because this was so weak. This up move in the morning was so weak. I'm like, I'm not even gonna play with this. I'm just gonna let it go and then let it drop. I could have scalped it up here because actually I was warning the guys on Twitter right here. I said, hey guys, it's gonna start the up move now. So, but whatever. Friday, released at 9:32. Here we go. See, here's opening bell again. I just waited. I needed to see more. But once I saw this, here we go. Up, and then down, 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 up, down. How did Friday work out yesterday? Oh, yeah. Up, down, 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 up, down. It's the same pattern, guys. Okay. That morning, yesterday morning, here we go. 40.14%. Scalped out. And then it came down, came back up. I shorted it exactly right there. 59.82% down. And then I waited for it to pop back up, and I shorted it right there. 70.24% short. Okay? That's it. This is just straight facts. These are undisputed. That's it. I have figured out the market maker's algorithm. I have figured it out. I got every leg correctly this week, Monday through Friday, except the Z leg of Wednesday FOMC. But I have corrected for that, and next time I won't miss that call. Okay? I will not miss that call. FOMC and Jackson Hole, as you know, those are the toughest days to trade, guys. That's wicked, wicked, wicked moves up and down. So if you could guess, if you could not guess, if you could predict FOMC, well, then you can get any normal trading day. That's not that hard. Okay. Haha. At 3 p.m. Well, actually, it's 2:59 p.m. Central Time. With 1 minute to go until closing bell, I scalp long, holding over the weekend. It's going to bounce, guys. 429.66 was the key level that we held. That's what I was looking for in the final 60 seconds. I was like, ooh, 429.66, guys. That's the May monthly high. May 2022, not 23, 22 monthly high. It held. It's going to bounce. Now, yes. Monday, this coming Monday, it's going to rip. Now, Monday is going to be another bull and bear trap day like Friday was. I'll release the pattern Monday morning-ish, but I've already got an idea what it's going to do. But as you've seen here today, I don't release the pattern pre-market all the time. And actually, I think it was like Tuesday, Wednesday, and Thursday, 3 consecutive days. I waited until like an hour after opening bell to release it because I had to confirm the pattern. I don't just release it because I'm guessing. Like, no, I need to see more. I need to see more, and then I'll release it. Okay? So, get ready. Monday's going to be just as volatile as yesterday. We're going to get some big ups, and we're going to get some big downs. So, get ready to scalp. This is not a swing trader or a buy and ride market. You will lose money if you do that. Okay? So, why am I showing you September 2021? I got to give some credit to LRF Car Reviews, a fellow subscriber on YouTube. He pointed this out, and it's actually valid. Look at September 1st, 2021. Up, down, September 20th, low, up, down, October 4th. That was the low. And then what happened after October 4th? Ripped City. Let's fast forward to September 1st, 2023. Up, down, to September 22nd. Up, down, to September 20th. You guys see the pattern? The next move is, I'm not going to, I don't use the word oversold. Because oversold is subjective, and it's qualitative, not quantitative. Oversold is subjective as the DeMark counts. Because you don't know when the bottom is. Is it the 3rd day? Is it the 4th day? Is it the 5th day? See, look at this. Look at this. Look at this. Look at this, October of 2021. 1, 2, 3, 4, 5. At what point would you have said it's oversold? Would you have called it on the 4th day? Thinking, all right, it's time to rip. Oh no, 5th day down. You see what I mean? You can't say it's oversold. Market makers look at levels. Like what I just showed you, 429.66 is the level. That's the target you were actually going for. It's not an oversold, undersold, overbought, underbought scenario. It's you were going for a specific level all along. All along. So you got to try to figure out what that level is. Okay? So, look at this. Almost down to the day. September 20th, 2021. September 22nd, 2023. Almost down to the day. Yeah, we're going to bounce. But Monday is not going to be a bounce. Monday is going to try to be a higher low bottoming. But in doing so, it's going to trap bulls and bears. I'm going to just leave it at that for now. Okay? Monday is not going to be like, oh, big green candle. Like this. Or, you know, it's not going to be like that. It's going to be something like this. Okay, so here's the low. It's going to be more like this. Something like this. All right? Something like this. Okay? So, All right, let's go to the 195 minute. Kind of hard to see, but check this out. I want to point out some important observations. The March 13th, 2023 low, right? The 195 minute MACD was at negative 4.02. Yesterday, we closed at negative 342. Okay? This is the lowest we have been since the March 13th low. Okay? I think this was the August 18th. Yeah, this is the August 18th low. It was like negative, oh, memory serves me, negative 2 something. Okay? That was the previous low for the MACD, 195 minute MACD. We made lower lows now, but I'm going to zoom in the next slide so you can see it. This is kind of hard to see. This is more of a macro picture, right? Okay, negative 342. Let's zoom in, magnify slide, check it out. There's your notch, guys. That's a temporary bottom. It's a temporary bottom. We have made a temporary bottom when we closed at session lows yesterday. Look at that. Down, up, down. That's a slightly higher low than this. Okay? See that? Yeah. We have a temporary bottom in, guys. Temporary bottom because I think next week we're going to bounce. Next week's going to be overall a green week. But October, we're going lower. That's why I said it's a temporary bottom. We're going lower into October, guys. I don't know exactly where that bottom is on what day, but we're going lower. We have not quite bottomed completely yet. But I believe October will be the bottom, as it will mark the annual anniversary of the October 13th, 2022, the hive. SPY 348.11 last year. SPY 348. We're not going down to 348, guys. Nah. No way. Nope. No way. Okay? So, all those perma bears like Ron Walker, he's going to be sorely disappointed yet again in his prophecies. Okay. So I get, questions. What are my methods? How do I figure out all of these things? So I'm just listing them here. Here's 1 through 5 down here, right? Bull bars, regression lines, aka the matrix lines, main channel lines. I always tweet that all the time. Main channel, main channel, main channel, main channel. MACD, RSI, EMA 50, SMA 20 across all these different time frames. You guys who follow me, this is nothing new for you guys. But I'm adding 6 through 8 now in my recent analysis that I have discovered. SPY and futures patterns complement each other. It's very, very interesting, fascinating how the interaction happens. It's like two sides of the same coin. I have previously tweeted, and now I can confirm this. SPY does lead futures. Futures does not lead SPY. Ha ha ha. SPY leads futures. SPY, I've also tweeted this before, SPY tells the overall plot of a movie. Futures fills in the details of how the plot develops. Okay? So, the market maker reuses previous patterns. He loves to reuse previous patterns. If it's this pattern, then that pattern follows. If it's that pattern, then this pattern follows. Okay? And how does price relate to the magical lines? 44376, for example, 44376. That was the magic line that I called out in the morning on FOMC Wednesday. I said, you guys, you better watch this. You better watch this. Watch this line. Oh, major rejection at FOMC right at 44376. Boom, red candle down. Exactly. That's what I said earlier. Nothing is overbought. Nothing is oversold. It's target levels. You have to figure out market makers' target. It's target. It's not bought, sold, high volume, low volume, open interest. I don't look at any of this. I don't look at max pain. I don't care about any of that stuff. It's not relevant. It's levels. Okay? You have to figure out which is the level the market maker is targeting, whether it's intraday or ultimate, like, where is the low for a given pullback. Okay? So, and I've also said before, I don't use Elliott wave either, because Elliott wave is an estimate, right? It's just an estimate, and Elliott waves can be invalidated. Oh, the A, B, C leg, it can be invalidated. Okay, so I don't use that at all. All right, guys, I'm going to leave you with this that I tweeted. In the matrix, there are no red candles. There are no green candles. What do I mean when I say that? I actually have, I've tweeted this before, but I'm kind of coming full circle with this. When I've released bull bars down to the penny, some of those bull bars are actually red candles, anchored off a red candle. They're not all green candles. Okay? There are no red candles and green candles in the market maker's algorithm. They're just candles. So that's why I have these candles neutral. No red, no green. They're all the same color. That is part of the illusion the market maker throws at you. Big red candle, big green candle. Who cares? It's just a candle to the market maker. Choice is an illusion created between those with power and those without. There is no spoon. All right? Feel free to follow me on Twitter, where I'm giving intraday tweets. And now I'm giving intraday predictions. Don't forget to listen to your favorite music while trading. Helps you get into the right state of mind, into the right flow state. Please give this video a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 000, signing off.